Welcome to Fundraising Stories with Female Founders. I'm Julia Elliott-Brown, the founder and CEO of Enter the Arena. I'm a serial entrepreneur and an expert in raising investment and business growth. Our mission at Enter the Arena is to empower female founders to fly through pre-raise and investment and onto the exponential growth of their business with investment expertise and business coaching. Here we share the stories of inspirational female founders who've raised investment to inspire you to do the same. You'll hear their honest accounts of what it was really like to secure funding, the highs, the lows, and the challenges they experienced on the journey. And along the way, we'll discuss top tips for how you can be successful too. Today, I'm speaking with Vivi Cahyadi Himmel, the CEO and co-founder of AltoVita. Now, AltoVita is a corporate accommodation platform that serves large corporations, and their mission is to build the largest and most connected ecosystem in corporate accommodations with smart, safe, and sustainable living for employees anywhere in the world. Launched 5 years ago, AltoVita already has a global presence in 165 countries and over 3,000 locations. And what's really interesting about Vivi is that she's not only a founder, but is also an angel investor and a limited partner in several venture capital funds in the UK. To date, Vivi has raised $11.5 million US from both angels and venture capital firms to launch and grow her business. I am always super excited to speak with founders who are also investors, as they come at a fundraise with a very different perspective. So let's meet Vivi and find out more about her fundraising journey and what she learned along the way. So hi, Vivi, welcome.
Hi, Julia. Thank you so much for having me here. And I'm so excited to be spending the next 30 minutes with you to deep dive into the fundraising journey of AltoVita.
Fantastic. And it's wonderful to see you. For those people who are listening and not looking at the video, Vivi has a fabulous cap on her head with AltoVita branding on it, which I love. Always be bigging up the brand. Great job. Okay. So let's wind back a little bit. So you've had a great career in investment banking. You then spent 6 years as the CEO of a family office managing their investment portfolio, and then you decided to take the leap into building your own startup. So I have one question for you, which is why?
Oh, why? So I have a fabulous co-founder. Her name is Karolina Saviova. And the two of us were essentially digital nomads ourselves before it became cool. We are both super international, very linguistic, multicultural. I'm from Indonesia. I went to boarding school in Australia, and then I shipped myself off to the US in the middle of winter in Ann Arbor, Michigan, and started my career in finance in New York, and then moved to Hong Kong, London, which is my home today. But I also spent a lot of time in Tokyo, in Shanghai, in many different parts of France, particularly their wine regions. And Karolina shares a very similar story. She's from the Czech Republic. She went to Sciences Po in Paris for her undergrad and also master degree. And she worked at the UN in Geneva. She worked in Gabon, India, and as well as Indonesia, Jakarta, where my hometown is. So we love this notion of being citizens of the world, a global digital nomad. And the idea of creating a global empire was appealing to the both of us. We didn't know what we wanted to do at the time, but we have a very thick association or resonation with real estate and hospitality, given our sort of family background in real estate. But we also didn't want to enter into a business where it's capital intensive or sort of like a large exposure to balance sheet. So therefore, who wasn't inspired by Airbnb? So was I. I was actually an Airbnb host myself, and I was admiring how they're able to capture the largest single asset class in the world, real estate, without any exposure to balance sheet. That notion was super appealing to me, considering my background was actually managing hard assets. So when Karolina and I met, and actually we were introduced by our third co-founder, Ronak, we sort of hit it off really well in the beginning and fine-tune, research base, and came up with this idea of how to standardize and provide quality assurance to alternative accommodation. And after sheer hard work and research, we launched the platform in 2018, January, with that simple mission. And just thoroughly blessed to have found this incredible market, which is the corporate accommodation. We convinced ourselves it's our product market fit. And it's like, wow, it's super traditional, it's not digitized at all. And it's one advice that I would give to any other founders is that you need to find an incredible market, a big market with a real problem. So that's tick. And then for solution, we can always build the right solution for any problem, but you can't create a problem.
Yeah.
So so that's sort of like the journey of how AltoVita was conceived.
Wow, amazing. Do you think you had any idea what it would really be like to be a founder building your own business from scratch when you started?
Not at all. And this is why Carolina and I love what we do at AltoVita, is because we learned so much. Of course, not everyone is a founder. Not everyone can wear multiple hats and switch from one function to another, but we love it. 5 years ago, 6 years ago, I didn't know anything about anything. I mean, I knew how to do some finance. I usually went to business school and so on, but didn't know how to market, how to sell myself. What is product development or technology? It was just kind of like a different universe to me. And I'm sure Carolina would say the same thing. But we just love to read and we love to learn. We love to be associated and surrounded by smart people and just kind of like get onto it and have that goal-getter mindset.
Yeah. But you did, you came from a background of investment management. So you, I'm imagining, must have had a really reasonable sense of the kind of finance part of it at the least.
Not really, Julia. I mean, my job was to sell the great companies. These were companies who were making hundreds of $millions of revenue, and they're hundreds of $millions worth in valuation. Everything was so structured. It was so easy in investment banking. Kind of like a rounding figure is up to 10 million, and here we were trying to produce the first 1,000 revenue, the first 10,000 revenue, and it was not the same at all. Yes, of course, we have some basic life skill, and able to write, read, and everything, but it was such a new horizon for us. But I think that's also that humility, sort of understanding where your weakness is and showing how eager we are to learn has been translated so well into the culture that we have built here at AltoVita, which is to be humble, right? And it's okay if you don't know. It's okay if you make a mistake, you admit it and you learn from it. Yeah. And we have this saying in AltoVita, it's a very simple sentence, saying AltoVita grows because you grow. And I would always use my own example because I didn't know anything 5 years ago, 6 years ago. And now we are surrounded by this incredible talent who work with us, for us, and we collaborate every day. I'm inspired by their work ethic and their knowledge and experience in running scale-ups.
Yeah. I love that. I love that honesty. And I think, take note, listener, just because you've worked in investment banking doesn't mean you know everything. But I mean, the early days, right? So you got this amazing idea. You've got 2 co-founders, a big market where you can see there's a big problem. So it looks like it's got great potential. So at the beginning, did you need to get that funding right at the start, or did you manage to get a little way along from your own fuel? How did that shape up?
I mean, just to be very transparent, we put 60K into the business. So that was sort of our bootstrap capital to get us from A to B, right? So, it would have been, because we were all like sort of first time founders. We didn't have any serial entrepreneur or founder track record that we would be able to just sell based on paper. So we knew that. So we were realistic. And so here's 60K. How can we use 60K to the best possible outcome to launch the AltoVita.com as you see today? We launched it then. We probably spent 25K on that. And the rest of the funds were used for marketing, business development, partnership, recruiting, sort of like our in-house first 2 developers, one full stack and one backend developer to kind of run the day-to-day of AltoVita and transition from kind of agency built platform to like an in-house platform with iterative mindset. So yeah, so it was 60K, and then we raised another, I think around 300K of funds within a year of the launch.
Okay, because I mean, you're building a marketplace, so you've got to have enough, properties on there for people to rent and enough clients to go and rent them. So there's some challenges there, aren't there, around moving at a reasonable pace to make it happen. So so 60K of your own money, great, bootstrapping, fantastic. And then this 300K. So tell us about the 300K. Like, where did that come from?
Oh, yeah. So we're lucky to be based in the UK. There's this wonderful SCIS or EIS scheme that we can tap into, and that's the reason why we incorporated AltoVita, the company, early on, so that we were able to receive the certificate of assurance, I think it's called, by HMRC, and just to tap into this incredible network of angel investors in the UK. So that's the majority of our funding, where it came from. And of course, my husband invested, Carolia's father invested, and then our third co-founder's cousin also invested. And then I've got my friends. One of my best friend, Kimio, invested. My other Japanese friend, Natsuko, invested. So lots of friends who sort of believed in me,
That's great.
so to speak. But otherwise, yeah, it was wonderful angel investors who are still very engaged until today and super supportive of AltoVita journey.
Yeah. So kind of like a friends and family round to all intents and purposes. And I know some founders feel like kind of uncomfortable about going to their friends and family. How did you feel?
I felt uncomfortable. I did not. I just went to the very select best friends who just understood me. I did not go to just any friend. It's my best friend, Kimio. It's one of my best friends in Tokyo. When I spent a lot of time in Tokyo, she became my best friend. If they're not like extremely close friends, I wouldn't even ask them.
Yeah. But the thing is, I think for us to feel confident to ask friends and family, we have to feel really confident about the opportunity, because the last thing you want to do is ask your best friend if they want to invest and then let them down. It puts a huge pressure on you, doesn't it, when it's friends and family? Yeah. Okay, so 300K. So that must have got you a little bit further along. And then what? Did you have to then go out and do a larger angel investment round after that?
Yeah, and then COVID happened actually. So we raised another few $100,000 during COVID. Obviously, it wasn't easy. Our plans were delayed, but at the end of the day, we will to look at our traction year on year. We've always been growing at least double or triple every year. So we were able to use this very capital efficient resources. So we weren't raising millions and millions in the beginning. In fact, the first million only happened last week. Sorry, not last week, last year.
Right.
So it was always just like a few $100,000 here and there that kept us going. Like, and I think, as my husband puts it, it's like it's the numbers that speak for themselves. You've been able to grow the revenue. It is the metric that investors are looking for. So we received, I think, up to now, a total of 6 term sheets, I would say. And then obviously there's the Series A last year. That's one term sheet. But before that, there was a few other term sheets that we didn't end up signing, simply because the terms were a bit tough. And Carolina and I wasn't easy for us to decide, but we decided to walk away from a few term sheets.
Mm.
And then we did sign one term sheet in 2021. Went through the due diligence, the whole 9 yards, but it didn't happen.
Mm.
So it was a devastating period of AltoVita. I remember this is, I think, around November time, where we just could not believe it.
So
but
by this point, you were sort of, so you've got you've been sort of topping up with angel investment.
Mm-hmm.
I mean, by the way, you make that bit sound really easy. 100,000 here, 100,000 there. For most founders, getting 100,000 or 200,000 isn't that easy. Did you?
Yeah.
Before we talk about this term sheet issue, did you find that easy? Was it kind of flowing?
No, definitely not. I think it's important to have not everyone, but like just a few anchor angel investors, those that really, really resonate with you, with the problem, with what you're doing, and you sort of have a good banter with them. Occasionally, just kind of drop them a WhatsApp message, and be open and transparent, right? It's not always the shiny part. There's a lot of struggle, and it's given. So I think we have about 15 of these very engaged, very involved in angel investors. And so we just go back to them. Look, this is what we've achieved so far. What do you think? Can you anchor maybe, the first 100 to 150, and then after that we can go back to the wider group. And that has always worked. And here's 10K, here's 20K, and then we managed to get to, like, let's say first 100, and then the rest is much easier. It's that it is not a myth. It is true that there is that herd mentality within investors. If they know their network or friends or trusted friends who've done due diligence on the company, and they put money, the rest will put the money.
Yeah, shortcuts the process, doesn't it? And I think what's interesting about your business, and I'd love to see if this is correct, my assumption is that because you are selling into a corporate market, you've got a B2B product. It's very tech, so it's not capital intensive. And I imagine that lots of the potential angels you're talking to will get what you're doing quite quickly because of that. Would you say that's true?
Yes, absolutely. The resonating with problem is crucial. 80% of our angel investors, even before the Series A money came in, are either working at large companies or used to work at large companies. So they resonated with the problem. They saw firsthand how messy it was, and their experience in relocation or being sent on project assignments were not great. So I think when people think about product market fit, you must also think about investment market fit too.
Yeah. And finding investors who get what you do makes it easier because you're kind of pushing on an open door.
Yeah.
So lots of angel investors on board, and then you decided to go out and do a bigger raise and start talking to the venture capital market and start looking a larger round, Series A type round. Tell us about the term sheets then. So some of them you walked away from,
yeah,
which I think is brilliant, and we should get better as female founders of saying no. So I'd love to know, first of all, like, are there any key things you can share about why you said no? And then let's hear about this term sheet where you wanted to say yes and it fell apart.
Yeah. So in the early days, it wasn't a huge amount of money. It was like 100K here and there. And there were probably one or two term sheets where, for a small amount, a few 100,000, they would demand a board seat. And Karen and I, we never give anyone board seat until the Series A, because we just didn't feel like it was the right move. I mean, we've obviously asked a lot of people and done our research. It's just an amount that did not deserve a board seat. So that's one. And then there's another term sheet that would require the two of us to personally guarantee the investment. So again, we did a lot of research, and that's unheard of, especially in the UK market. So those are the two main reasons why we've walked away from those term sheets.
Yeah, I mean, I can't stress enough, and I know you will back me up on this, that, we should never sign anything that we don't understand or totally buy into, because, I mean, those kind of clauses where it feels like they're trying to slightly catch you out are not cool. And actually, investors that are doing that, I mean, it's a small ecosystem, right? The good investors don't do that because they want you as the founder to succeed and feel motivated to do so. So these are red flags. So I'm so glad you spotted them. and then what happened with this term sheet where it fell apart?
Yeah, so look, we had a $5 million term sheet, and it felt right, and there was a lot of negotiation back and forth, and we eventually agreed on a win-win term between the founders and the VC. Went through the due diligence, it all seemed completely fine, and then suddenly there was a request for a call, and that call was when they decided to walk away from the investment.
What happened?
I think it was something to do with what they found in the diligence. I guess there was a risk that they weren't comfortable with, and so what we did was go back to those anchor angel investors. I spoke to them personally. There was 8 of them that I personally approached, and just sort of transparently described to them, explained to them, here's what happened. And we're now trying to raise maybe $500,000 just to make sure that we can continue growing, because AltoVita never needs money to survive. We're not one of those businesses who, without funding, they will collapse. No, it's always about growth. So we said, look, we want to raise $500,000 now. I think we can double and easily triple the revenue. And within a week, we raised $300,000.
Wow, there you
go. And then that eventually became like 1.3 million round.
Yeah, so those angels really believe in you, and it's good that they've got that follow-on money to keep moving you forward.
Yes,
but you did still then decide to go out and go for this Series A, which you did then achieve.
Yes.
So let's talk about that for a little bit, because I know that you approached that in an extremely methodical way, very data-driven. Talk us through your process on that round.
Yeah, so it wasn't just intuitive, right? For me, I did quite a few IPOs. I raised hundreds of millions of dollars when I was in investment banking. There was already like a well-prescribed process to follow, defined by the MDs and the partners of the companies. I knew nothing about fundraising for startups. I just read a lot of books and spoke to many different, I call them sort of like older brother founders, because they've been through the journey and they're now doing Series B and C. These are incredible resources to tap into. And I approached it the way any sales effort should be, or even if you're dating, right? It's a numbers game at the end of the day. They'll have to love you and you have to love them. The chemistry has to happen. And so over the years, obviously, I've been building a network of VCs. It wasn't the first time we went out to market, right? We tried a few times, and obviously it didn't always work. But it's just about keeping them engaged, keeping them in the loop. Even if we just sent like investor update emails every 3 months or every 6 months, that was enough. And one thing I learned by being a founder is not just about the company brand, it's about the personal brand of the founders. So you can see that Carolina and I are extremely engaged with the market. So people know who we are. And even if they're not being sent personal email, we've been leveraging lots on LinkedIn.
Yeah, you've got to be visible, haven't you?
Yeah.
And I think
Yeah.
those, you don't have to sort of broadcast we're raising necessarily, although actually I would say, why not?
Yeah,
But
indeed.
we have to put our heads above the parapet, otherwise nobody's going to know who we are.
Yeah, for sure.
Yeah.
And I'd love to talk about this later on after the Series A. There's actually so many investors that approach us, and my mailbox is full.
Wow.
And a lot of it come from inbound investor leads. It's
Well, that's it,
incredible
because
how
now you're on the radar, right? You're on the radar. Do you know what I was thinking when you just said that, though? Wouldn't it be great if somebody just built like a Tinder for investment where you could have
I
an
think
app?
there are. I think there are. I have seen it. I haven't used it myself, but I think there are. Yes, yeah.
I've not
But
seen
know
it.
what? That would be clever, because that's exactly what happened. Is dating with these investors. You have, like, we have precisely, I think, 294 prospects in our pipeline, and we spoke to 54 of them.
Yeah. And when you say spoke to, did you have, is that meetings with them?
Yeah, meetings, be it in person or Zoom. But like, for sure, it was like a deep dive into AltoVita, be it half an hour or 1 hour.
See, again, setting those expectations for people, that's not unusual.
That's not unusual at all.
And I think there are some founders that go out and maybe have had 6 meetings and they've had 6 no's, and they kind of go, oh, nobody likes this is rubbish. It's actually you have to get ready to have a lot of meetings. But the fact that you've got 54 meetings, that's, it's challenging just to get the meetings, isn't it?
Yeah, that's why, like, the work in building the pipeline is not just like a 1 month sit on Salesforce or HubSpot. It's really at least 12 months, if not more, so to build that pipeline. And then again, going back to anchor angel investors, leveraging on their network, sort of asking them, giving them the right tool, here's our recap, so that they can just easily forward to their network. And introductions come flowing from them.
Sales process.
And some of the VCs who, some of them are just incredible. They may not resonate, like, their fund may not have the mandate to invest in AltoVita, for example, because of various reasons. Maybe the vertical is not close enough to build environment, for example, but they loved it and they were kind enough to introduce AltoVita to their network. So it's always about creating a snowballing effect. 294, it wasn't easy. It could not have been done just by me and my co-founder. It had to be done by multiple ambassadors and become ambassadors themselves. And
amazing. And in that process, let me ask you a question. How many of the VCs did you meet that you met were women?
Yeah, great question. So we met with 54. Of that, 9 really went through massive due diligence with AltoVita. And I think I met only 3 female partners. And one of them is Sarah Liu, who was a partner at Fifth Wall. She's based in Austin. And of the 3 female partners that I met, one of them invested in AltoVita.
That's fascinating. So with some hindsight now, looking back at that process, do you feel that affected you as a female founder? How did you see a difference when you were talking with female VC partners versus male VC partners, or not?
Oh, it's a tough question, Julia, but I never thought that being a female was different, because I had a very strong mother. This is my role model. And I went to girls' boarding school, and I had incredible and super talented friends from my boarding school days. So I never felt like being female was different. I mean, it's a different gender, but that's it. It's equal opportunity. It's merit-based and so on. That's how I grew up. But as I when I went to finance, and yes, I was aware that being women, you were minority. I'm minority of minority, not just because I'm a woman, but also I'm ethnically Asian. So I worked in New York. I worked in London. I've always been minority of minority. I'm aware of that. but I just didn't expect that statistically speaking, we only receive 2% of the funds available in the market. That to me was mind blowing. I didn't believe it. I didn't want to believe it because that puts me in a very disadvantaged start, right? So I didn't care too much about it during the fundraise. But seeing that Sarah truly believed in us, and she's a female partner, and we love Fishbowl. And I think it makes a difference. And that's why I'm speaking to you today. I really want to help spread the word and help other women however I can, by sharing the story, by sharing not just the successful outcome, but really the painful and the tough journey that we have to go through.
Yeah, it can be tough. But you found your VCs, which is great. And that bigger round that you did, which was a total of what was it, $9.5 million. So global investors at that point. And you've kind of got Fifth Wall, who are in the States. So did you see a difference again with the investment market and the approach of investors in the States versus the UK?
I mean, there's obviously this cliche, which is, in the US you get better valuation and it's easier, but at the same time, the US investors, they don't have a mandate to invest outside of the US, so you'd have to go to a global fund who has either the mandate or have offices in the UK, right? So then you're faced with much more limited pool of funds available already, because I spoke to many US funds who just were not able to invest outside of the UK unless you have the Delaware set up. But if I'm really honest, I think we got much more traction with European VCs and US VCs versus the UK, for reasons I still don't understand.
Interesting.
Yeah.
Is that because they've got more funds to deploy, that they have a different attitude to risk?
I'm not sure. I think perhaps if I really were to think about it, I'm sure I can come up with 3 bullet points. But I think it's really to do with the fact that perhaps we're women founders. I don't know. Maybe we're just different. We're not from the UK, right? All right. So perhaps that's just the one thing that is the foundational issues in investment world, which is you invest in the things that you invest in the people that are similar to you, or that speak like you, resonate like you, and so on. And that's how we managed to get our investments too, is because we found those that resonated with our problem, with the problem of AltoVita that is trying to solve. And perhaps that's the foundational.
Maybe. And also, because you're such a global solution, I can imagine that those kind of European-wide funds would see that and be interested in what you're doing. So, yeah.
Indeed, yeah. I think the challenges that we found in fundraising of AltoVita is always around people not understanding the global ambition, right? So many solutions are very local driven, and then once they conquer that market, they go to another one. We're blessed because with AltoVita, we are not that industry where you have to have, for example, if Uber, it's a very country game. You need to have the right licenses to operate in that country. Fortunately, we don't. But of course, it comes with other issues, right? Which is defensibilities in the market and so on, competitive landscape. That's why we're building AltoVita with other tactics, making sure that the product and the technology are solid. And we have great network of clients who truly believe in us, and so on and so forth. So there are other tactics that we're deploying right now. But those are the fundamental issue. Is not a business that was just successful in the UK and then conquer the US and then conquer China and so on.
Well, it's amazing. I mean, and that money you secured last year, that big Series A round, I'm imagining that is going to have such a great impact for you and your growth plans. I mean, what is next for you? And can you see profitability, or do you think that you will need to raise some more?
Yeah, I still believe that AltoVita is a business that never needs funds. We can always turn it into profitability today. Last year could have been profitable. Even actually, in fact, we were profitable structurally during COVID because we weren't spending so much investment, so much money to grow. We were actually profitable. So we can even be profitable today. It's just a question of growth and fundamentally what kind of business you're trying to set up. Carolina and I are super aligned with this. We're not setting up a lifestyle business, as we call it. It's a high growth, ambitious, KPI driven, and we want to be a unicorn. We want to list on NASDAQ in 2026. It's not, we want to build a truly valuable company that matters and truly defining over the next few decades. We're not even be tempted to sell AltoVita at, I don't know, 100 or 200 million, for example. It will be a great discussion to have, but that's not the company we want to build. And therefore, we need to be investable. We need to have that mindset and set up the company in such a way that is desirable to the investors.
Yeah, and we need more female unicorns. So, we saw you here. We're going to watch you gambling across the fields as a unicorn, and can't wait to see what you can achieve next. It's very exciting. Thank you so much for sharing your journey with us all. Lots of learnings that have come out of this, and we wish you all the best. Thank you so much, Vivi.
Thank you so much, Julia, for this opportunity to share our key learnings. And I really hope that this is going to be useful for other fellow female founders out there. And if anyone would like to get in touch with me or speak with me, I am more than happy to share my learnings directly. And my LinkedIn is super simple. I think you can hopefully find me through this podcast.
Wonderful. Thank you so much. Thanks for following Fundraising Stories with Female Founders. This content is all provided to you for free, so if you've enjoyed today's episode, please subscribe so you never miss another one. Enter the Arena has helped hundreds of female founders fly through pre-raise and investment and onto the exponential growth of their business. Our first-hand experience, expert guidance, and proven programs help female founders unleash the Wonder Woman inside. To see if we can help you do the same, head over to www.enterthearena.co.uk. I'm Julia Elliott Brown, and I look forward to talking with you soon.